Hi everybody, this is Jazz, aka Trend Trader for you. First of all, apologize for not putting out the video last week. Had some issues I had to take care of, and I'm back on track. Okay, so what we're looking at is a SPY analysis, weekly chart on the right, daily chart on the left, and as you could see, our weekly chart, the weekly trend has been up ever since we've been starting to talk about it. It's always been up, and continue to go up without any weakness. Okay, without any weakness in the weekly chart. There's some weakness in the daily, but looking at the weekly chart, higher highs and higher lows, and somewhat of it putting a looked like it was putting a top in here, trying to go down, but it eventually came back up, put another high, and had a retracement followed by a beautiful bullish engulfing candle. Had a beautiful downtrend in the weekly chart, as is supposed to. When you have a trend that is up, you want to see some pullbacks. Okay, and that's exactly what we saw this last few weeks. You had somewhat of a topping tail in here and a selling pressure for 1 to about 3 weeks, and this candle right here, you can call it a high wave doji. Usually when you see a doji, you need to wait for the next candle's confirmation before doing anything. Either it's an uptrend or it's in a downtrend. So you had a nice downtrend, had a high wave doji, indecision by the bulls and the bears, and nobody really won the fight in here. And the second candle that formed after the doji was a bullish engulfing candle, which actually wraps around this little candle. It has to actually wrap around the body, not the whole candle. And body of this candle actually wraps around the body of this, so he calls it a bullish engulfing candle. And bullish engulfing candle happens in a downtrend, which that's exactly what we see. You had a nice uptrend in here, pullback, bullish engulfing, somewhat of a topping tail. So price did go test the recent highs that was made a few weeks ago and has some selling pressure, but that doesn't change the fact that we do have a beautiful bullish engulfing pattern in an area where we need to see. Also, if you look, we had a little bit of high volume on here on this last week's price action. Exactly what you want to see when you see a reversal candle happening in the right trend. So let's look at the daily chart. So daily chart, choppy, choppy, choppy. This is not a market for swing traders. Okay, um, I've seen where stops are being triggered, and it's just not a choppy. It's just a not a trending market. For instance, if you look at this part, right? Nice swing to the downside, price goes up, has a beautiful swing, price comes down, has a beautiful swing to the upside. Right here, all we are seeing is choppy, choppy, choppy. Price goes up, bases around here, then goes down, goes up, comes down, even all around here, just sideways action. Can it be tradable? Yes, it can definitely be tradable, but with a different perspective of going down into the smallest time frame. For instance, the hourly time frame, 30 minutes. So it's perfect market for day traders, but swing traders are having a little bit of tough time trading a SPY. Again, you don't have to trade SPY. You can just get in. There's stocks out there that are given better opportunities of going long or short, rather than just trading the market itself, which is SPY. So, but a lot of people just want to trade SPY, which is totally fine. You can trade the intraday, or you can trade swing by having your loss defined. Weekly chart was decent, had a nice reversal, right? High wave doji followed by a bullish engulfing. You can trade something like that, or you can trade going into the smallest time frame. Okay. However, this we talked about it, how this was a critical area for it to hold, and it did hold. Okay, there is a support around here which has been tested many times. Okay, this support around here has been tested about once, twice, third time, fourth time, fifth time. So support can be only tested before it's broken so many times, and it's been working, right? Every time it comes back in, it's working. I thought right here, the move that we had in here, okay, broke this kind of trend line, had a little fake out, didn't work, came down in here again, and once it came down in here, I was a little bit of bearish on this. I thought it'll probably put a lower high, probably could go down and even test the 200 SMA or go down to test this support area. But hey, you know what? That this is exactly, you look at the chart and trade the chart based on what you see, candle by candle, week by week, daily by daily, whatever your time perspective is, right? So broke out of this, had a reverse. In fact, we called a few trades in here on the SPY. I believe it was right around, once this candle formed right around here, and that was your beautiful trade, went up to 213. Broke out of this trend line. Not that really matters about the trend lines, but you know, just as a guide, did break out of here, had a beautiful move to the upside. Then you had Friday morning price gap down. You know, hard to catch those kind of moves, because either you're trading futures, you can catch them, or you're trading something else which doesn't gap up like that. But when you have something that goes up, gaps up like that, it's really tough to trade that kind of market, right? Because overnight this dollar to $1.50 gap happens in the SPY, and you know, if somebody's long, they lose out their profits, or if somebody's short, they're, you know, making substantial amount of profit. But it's just at that point you are basically, you know, the chart is not with you at that point. It's just so choppy to trade something like in a swing matter, right? The price goes up. This was a resistance that we talked about right around here. Okay, this was noted out. So price came in exactly right in the resistance and went down, and I was still, when it was coming down, I was still bullish based on the price action, based on the breakout, based on how it was testing this resistance over again. But hey, you know what, price came down, didn't give any kind of reversal that you wanted to go up. So you let the, if you're bullish, you can wait till the price gives you some kind of bullish signal. If it doesn't, there are 5,000 other more stocks to trade out there. So as far as the daily, you still have higher highs, right? Higher high, higher high, higher lows, right? Let's see if it goes up, makes another high. Price is somewhat around 20 and 50 SMA. You know, you can say close below, what is this, 20, and right above 50, and then you have a 200 SMA just as your guide. So let's look at the smaller time frame. So let me go out here. I'm just gonna go in the 30-minute, okay? In 30-minute, what I see, this is what I saw in the shooting star, right? Shooting star happens in an uptrend, and follow through happened, and in fact, right in the resistance, this is where it came down to, okay? Being this a bullish intraday uptrend, I was hesitating to, you know, go short on it. Can you go short? Yes, the risk is definitely defined, but I'd rather look for some kind of long when your intraday trend was up. So rather wait for it, right? But if you want to go short, that's totally fine. What happens next day? Price gaps down, right? So nothing you can do about that. The price gaps down, and as we go into Monday, we have a gap to fill right above here to about I would say about 230 something, right? 235 to all the way down here to 1289. We have a possible, if the price comes in here, this could act as new resistance, and from there on, if price wants to go down, it can put a lower high in the daily chart and test the lower levels, which is around let me go back in a little bigger time frame, see where that would be, right around this area. Okay, so if price comes down, doesn't gap up, or it all depends on how the price opens, right? It could open, shoot up to the moon, or come all the way down, or if it just bases around here, possible to look for either come down into this area around 209.23 to 208.65 and see if there's a bounce out of here, and possibly even try to attempt to fill this gap up. So that's your very simple weekly analysis, nothing major to it, right? Weekly is up, and your daily is somewhat of a sideways action, trying to, you know, prove itself that it wants to go up. Support is held, so resistance held, kind of like in the no man's land right now. I wouldn't take a swing trade in here, but that's just my opinion, right? Everybody has their own opinion. However, the trade was here. That was the called out. That was the trade, and went up right into the resistance. So we'll just have to wait and see if there's a better setup. Okay. There's one stock I want to talk about. Twitter. Okay. Twitter. It's been a popular stock to talk about. Some major news came out, and you gotta look at the trend. Definitely gotta look at the trend in weekly, somewhat of a choppy trend. But what I'm noticing in the weekly, okay, uh, first of all, daily, huge sideways. People were uh, that were long stopped out, okay, stopped out. And as you could see, this was a day when the in the pre-market some news came out, the price actually went up to 38, 39, even 40, and just totally kept selling off that day. Following the price gap down, stopped everybody out, right? Because people were bullish, because they're, oh, okay, price is going up and let me just go long and see if this works out or not. In fact, I was even bullish too, okay, just because the price action happened that day. But hey, this is trading, that's the part of trading, right? And you try to uh, calling bottoms out is one of the most difficult trades. But if you catch the bot catch the bottom with some clues on your side, with some technical analysis skills, the reward is substantial. You're in the trade before all these breakout traders come, right? If you're a pullback trader, there is some risk, but the risk is smallest. With a breakout trader, the risk is slightly bigger, but you're getting more confirmation. Hopefully that makes sense. And that is exactly what I teach my clients, that how to exactly find a greatest entry. Either it's a pullback or it's a breakout, right? The greatest entry with the smallest risk possible. So this is what happened that day, and in fact, this was the trade we talked about, okay? There was no hindsight to it. We talked about how watch. I believe I said a 35.24 watch above, and that's your long right there. With either you stop under this or you stop under possibly under this, and this sucker just kept ripping. And this was the right around here, 35.90. That was somewhat of your resistance area, but he just kept ripping and came to test the your 20 SMA and still bullish. This is a really bullish setup. Break out of here and tested this resistance, and it'll come into play. Resistance always comes into play. Just price doesn't just shoot up. Price when price goes up, there are people out there, the traders out there, the orders out there that they're willing to go break even, because they got in here. They're like, I need to go break even so I can get back into the trade. And what that does, that causes the prices to go down again. So we'll see how that happens, right? But as far as the weekly chart, that's what I wanted to talk about. Is Let me take this line out. This is somewhat of a hammer. That's what you call not the best looking hammer. Let me try to find. This is the best looking hammer right there. It doesn't matter red or white. Right there, that's a hammer. Ideally, you need to find a hammer in a downward, okay, trend, downward trend, downward trend, right? And ideally, you don't want to see a topping tail on it. You see how you see a little bit of topping tail, somewhat of it. This topping tail is acceptable, but you want to see small or basically no topping tail on top of this little body. And when you're looking at a hammer, vice versa is also true with a shooting star, right? So you do have somewhat of a hammer, but I want you to go beyond that, okay? I want you to go beyond saying, oh, it's a hammer, I need to go long. It's a shooting star, I need to go short. I want you to go beyond that and try to understand the psychology behind what the hammer is, what the traders are thinking behind this price action of this week, right? It's a weekly chart. We're looking at a weekly candle. So go in it and see exactly what you see, and how are the traders acting behind this week price action, right? It's very important to understand the psychology rather than saying, oh, it's a hammer, I need to go long, or it's a shooting star, I need to go short. You need to understand how the whole technical analysis work, and this is exactly what I go right into the depth of it, rather than and that is where you actually gain your confidence, okay, as a trader. And when you start understanding the price action, you automatically start gaining the confidence in your trading. The hardest thing is not about getting in a trade, getting out, or letting the trades earn. It's about the mental or the trading psychology. If till you don't feel comfortable pulling, understanding the price action or how the trading is worked, you can't pull the trigger. You will always be hesitating, and then you'll regret, you know what, I should have pulled the trigger because that was the right thing to do, and now price is up, and then you start chasing the stock, and you get in, and second thing you know, you're like, wow, I shouldn't have got in. Price is back again where I wanted to get back in, right? So understanding how the price action works, that is the key to trading, and that's exactly how I go into depth by giving, analogies of looking at how to look at a chart, how other traders are thinking, or how their stops or their targets or their entries are based on the confidence that they have in trading, right? So anyway, so what I see is possibly hammered. Let's see if we have a possible follow through from a high of this candle, which was 36.28, and even possibly try to test 38. And you never know, you could actually come. I'm looking at a weekly chart. That means it'll take weeks, right? It could take a day, but looking at a weekly chart, it could take weeks before it actually comes up and puts some kind of trend in. But this is something, Twitter chart is something you want to put it on your watch list and keep an eye on it. And from there on, if there's a trade setup, hey, you know what, that should just give you my opinion of what I think in it. And if there's any validity to it, we'll see if it works out. If not, hey, you know what, it's just simply trading. We don't control the market. The market is always 100% right. It's us who are wrong. Okay, it's us who make the mistakes. Market is there. There are millions of billions of traders out there with totally different, each one has a totally different perception of taking a trade. But don't blame the market. It's someone you can't blame. It's you to blame. Okay, so hopefully guys, I'll talk to you guys later, and take care. And I'll be sending out the weekly analysis next week. Take care. Bye.